83% of businesses say they had to digitize previously paper based processes in the last year and a half since people have been working remote. Yet only 20% say they have automated their payment systems. Payments to a supplier can seem like an afterthought for most companies, whether it's a check or through a bank, they just want to make sure that the payment gets done. Whether you utilize Esker or not, making payments to a supplier can have its pains. But what if you could turn your AP department into an additional revenue stream while reducing your fraud risk? I'm Scott Leahy, and this is Esker On Air. Esker's Director of Sales, Dan Reeve, recently sat down with Brett Orr, Regional VP at Corpay, formerly Comdata, to discuss the growing interest in virtual payments to suppliers and why a company would want to completely automate their supplier payments.
Folks, thanks for tuning in to another Esker broadcast. The purpose of today is to discuss a trend that we're seeing at Esker. Finance leaders, VPs of finance, shared service leaders are sharing regarding lots of growing interest in virtual payments for a variety of reasons. And if you look at the slide to the left, this is a summary of where digital leaders will deploy Esker for gain within their organization. Yes, order to cash, that's one side, to try and accelerate collection of money, processing of sales orders. And the other side is procure to pay. And I think a key partner for Esker is Corpay. Brett Orr joins us today, Regional Vice President at Corpay. And Brett's going to help us as we ask some questions and explore what's going on at the end of the procure to pay process. So folks will often choose Esker to better manage their spend, control costs, provide the CFO with visibility across the ERP or multiple ERPs. At the very end of procure to pay is that need to pay the supplier. So Brett, thanks for coming along today and share what you're seeing in the market over the last 12 months. And if I'm not mistaken, you've been with Corpay a while.
Yeah. Well, first off, thanks for having me, Dan. I appreciate it. It's great to be here and happy to help any way that we can. It's been a great ride. I've seen a lot of changes, not only here at Corpay, but also just within the marketplace.
Right.
The fintech industry is constantly changing, evolving, and improving, which is the best part. And it's really been exciting to see a lot more companies start to take notice and to start to understand, how an organization, a solution like what Esker has, and the same with Corpay, how it can make their lives easier and more efficient. So really happy to be here and happy to visit with you today.
Well, just as in our world, we saw, many CIOs and finance leaders said to me, Dan, COVID has been, it's like hiring a new chief innovation officer. At the same time, he or she came along with a flashlight and people had to work from home. There was reluctance for folks to go in and pick up checks or to mail out checks. And just as payables automation seemed to dramatically grow in interest, lots of interest there, lots of interest in better vetting and onboarding of suppliers from a supplier management point of view. I was reading, and certainly in talking with yourself, seemed that your business was growing and lots of interest here. So what was it like over the last, dare I say, 15 months for you? What have you seen yourself or you and your team?
Yeah, it's a great question. And it's funny. I feel like that is, the $1 million question we get asked all the time. And the reality is, I think last year was still just such an unknown for so many companies that it was kind of tough for them to understand, what do we do? Right? We don't really know. We've never been through this before. We don't know what the outcome is going to be. And so I think a lot of companies found themselves just trying to hang on and get through it. And now that we've kind of moved past, 2020, if you will, and we're kind of into this, all right, we're getting back to the office and we're trying to normalize some things, where were the areas that we were really struggling? And obviously one of them, as you mentioned, is within the AP department, right? Where for a lot of different groups and departments within an organization, it's pretty easy to give them a laptop and maybe a VPN access and let them work from home. But the reality is within AP, if you don't have some kind of automation on the back end for your payments, you're going to struggle to work from home. Someone's going to have to come to the office and print checks and stuff and mail those checks out. And so that is kind of that last piece that we're hearing from a lot of companies is, hey, we kind of figured it out from a work from home model. and it worked really well for other departments. But we really need to solve, this issue within AP and become more efficient, obviously through automation, and kind of adapt to that, work from home model where everybody still, can get their job done. And so I think we're really starting to turn that corner now in 2021 of, yes, there is an issue, there's a problem, and now we're looking to solve it. Now that we know that we're kind of getting back to maybe normal times, we're going to try to solve it. And so we're starting to see a lot more companies adopt what we call our full AP solution to help with that.
Got it. So as I understand it, there's value in automating processes, but there's a lot of interest I've seen from Esker customers that have used the Esker platform for payables and other capabilities. A lot of the interest has been, it feels to me like you guys provide icing on the cake and make the whole platform very, very exciting. For years, thought leaders like Ardent Partners and others have been saying, hey, there's an opportunity to turn finance or payables into a revenue generating department, maybe even finance as a revenue generating department. What we're seeing is, and what our clients are seeing is, when they combine a tool like Esker with a Corpay, the ROI is dramatic. I mean, I'm seeing suddenly the project can be paid for within as little as 5 months, 8 months, and then there's recurring savings for the next 3, 5, 6 years, whatever. So could you speak a little bit to what are you seeing in terms of that ROI? Because I'm very excited, having spoken to CIOs and CFOs who are seeing an ROI capability that they're just not used to seeing.
Yeah, no, you're absolutely right. And, my first comment to that too is, anytime a company sees value in automating any piece of it, right, whether it's the front end piece, electronic invoices, whatever the case is, it's almost like, well, why wouldn't you want to do that on the back end, or vice versa? And to your point, we do talk about obviously turning an AP department into a revenue generator for the company. It is a revenue stream with our monthly rebates. But we've also found, working with Esker, that our rebates can actually offset, and not only offset, but a lot of times cover the cost of the monthly subscription fees for both solutions, as well as in most cases net some kind of a positive rebate to the bottom line. So effectively, a company that's using Esker and utilizing Corpay are getting 2 new solutions, 2 upgrades essentially for free. If nothing else, sometimes we're even paying them to automate their payments process from, invoice all the way through payment. And, from that perspective, when you look at it, it's like, this is kind of a no-brainer. Why wouldn't you want to do this, especially when companies are trying to get more to that work from home model? I just had someone tell me the other day, it's their whole goal right now is work smarter, not harder. How can I allow my people to still do their job without having to come to the office, 3-4 times a week to print checks? So we're seeing it across the board, and you're absolutely right. We're seeing in most cases, kind of that 4 to 5 month break even period. And then from there, the total ROI for years to come is exponential. So it's been a really good partnership.
Brett, as I think about the audience, perhaps it would be helpful if you were just to clarify there's different offerings that Corpay brings to the table. And I say this having recently spoken to a CFO of a healthcare organization in the Southeast who deployed both Esker and Corpay. And I mean, he explained he saw lots of value in savings and efficiency, but I think a lot of it was because it wasn't just a virtual pay offering. I believe there's a variety of components that you offer. Could you expand on that?
Yeah, absolutely. And glad you brought that up. I mean, I think that's what a lot of companies have heard from for a long time, whether it's through their banking relationship or whatever the case is. Hey, we're going to do some ACH payments, and oh yeah, we have this virtual card payment. Or a lot of times it's simple as a purchasing card that they're using to make some B2B payments. The reality is we've expanded on that, and we've taken our solution to the next level. We call it a full AP solution, meaning through sending one single payment file out of your existing ERP or your accounting software, we will map to that payment file and do 100% of your payments, regardless of the payment type. So, obviously there's going to be companies that are always going to take check and they'll never change that. But our goal is to try to get, rid of as many checks as possible and move it to some form of automated payment, whether that's a virtual card or ACH, potentially even wire, whatever the case may be. And so in most cases, we're getting companies close to 78% fully automated. And then obviously the remaining 22% would still be checks, which we're printing and obviously mailing out for them on their behalf. So, it's one of those deals where now you have the ability to literally just approve payments, send us one payment file, and then we will pay 100% of your vendors, as well as follow up on any support calls or, questions that your vendors have. We take all of those calls on. So an AP team truly doesn't have to be in the office, fielding those calls and answering those questions, throughout the month. So it really is kind of we don't necessarily want to say outsourced AP.
Right.
You're still, you still have your AP staff and you're still approving payments, but we can truly handle 100% of your payments regardless of the payment type.
Got it. In that conversation I referenced I had recently with a CFO, he was particularly pleased or valued the fact that if you folks there at Corpay make a payment, I believe you took over, or you take over the actual any fraud risk, and that seems to be in his example. He actually said, "Hey, we had multiple bad actors trying to hit us, be it through coming in with spoof emails or people trying to sort of take and doctor mail checks." And so it seems like just as during COVID there was a massive rise in e-commerce, along with that came a rise in cyber threat. Ransomware is obviously omnipresent, and we're hearing lots about that. But what I saw from companies exploring Esker or existing customers, back to the wheels I showed a little while ago, supply information management, the need to vet vendors, the need to check, do we have the right TIN number? Are they OFAC compliant? Is this indeed the correct banking details, and is now appropriate for us to be changing banking details? Seems like there's lots of interest there to make sure that people aren't being taken advantage of or their company being put at risk. And so I believe that's part of the offering with you folks. What is it you actually bring there?
It is, yeah. I mean, we're obviously backed by MasterCard, and so the MasterCard fraud protection is obviously very important. I mean, that is one of the biggest things that CFOs see time and time again throughout the year, is the amount of fraud that they deal with, and the amount of money that they actually spend, to either track down fraudulent payments or the money that they actually lose from fraudulent payments. So, the more we can obviously automate, the more that we can get, on a secure payment like a virtual card or an ACH, obviously the better. It puts them already at a lower risk just by eliminating the amount of checks that are being sent out. But on top of that, yeah, we handle all of the fraud protection, as well as just the overall compliance behind that too, because there is a lot that goes into that. And so that is something else that Corpay offers with our solution.
One of the things I've seen is many organizations will already have some way of paying suppliers. I mean, I would imagine most companies that unless they're brand new, they have a mechanism to pay suppliers through EDI, ACH, the banking relationship. And even when I've inquired with some customers or enterprises that are considering Esker, I often say, well, what are you doing at the end of the procure to pay cycle? What are you doing to actually pay? And it's not uncommon for folks to say, oh, well, we have this, or we use ACH, or we use the banks. Now, I'm under the impression that you folks bring, I don't know if aggressive is the right word, you bring greater value, or you often bring, maybe not always, but you often bring greater value than many banks are able to provide. And I get the impression that's both a combination of just how far reach MasterCard has, and also the various smarts and technologies that Corpay brings to the table. So how do you sort of, I don't know if the words deal with that, or how do you navigate when folks say, well, we have a bank? No. Sometimes I've said, well, are you happy with the bank? Are they, what else do you do with them? Would you consider this option if it netted you more savings? And my experience with you folks, when you've looked at our customers' spend file, I haven't had a situation where that customer didn't get particularly interested or excited because they saw just how much money they could get. So you ran across the banks. How does that dialogue go? What are you dealing with there?
Yeah, good question. And a lot of that is really just peeling back the layers, right, and asking more questions. I don't think banks are particularly interested in being the number one player in the virtual card space. It's another offering, right? Banks can offer a lot of different things. And so it's something else they can offer to their customers, especially if a treasury relationship is already in place. But when you start to really peel back the layers, to your point, we're going to create a bigger ROI. And there's a lot of factors in that, right? To quote one of my counterparts, basis points don't buy groceries, right? So, you might be getting offered a lot of basis points by your bank, but a lot of basis points is only makes sense or only matters if you're capturing a lot of spend. And so that's where you start to peel back the layers, right? Corpay has over 1.1 million vendors in our proprietary database that we've already enrolled in programs. So number one, we feel like we're going to capture more spend than anybody else out there. Right. We also have larger vendor enrollment teams, in the neighborhood of 60, 70 folks that are dedicated to the account. And literally that's all they're doing all day long is enrolling vendors. And so when you couple that with the fact that we're not only interested in just getting people on virtual card, but we're also going to handle, all of your checks. We're going to handle your ACH. It's kind of a one-stop shop for you. So the amount of hours that you're getting back in your week, there's a big cost savings, right? There's a lot of other efficiencies gained. So it's not just looking at, what your rebate is going to be every single month, but it's the total ROI that we bring to the table. And I think that's where you see a lot of CFOs, look at it and say, okay, this is great. Like these offerings over here look attractive on paper, but when you start to peel back the layers, what are we really getting, out of a virtual card program from the bank,
right.
And a lot of times if the rebates are tiered, all right, are we even getting to that top tier? Yeah, it sounds nice that their offer is 190 basis points at the top tier, but have you actually asked the question, let's see 10 of your other customers, out of those 10, have they ever made it to the top tier? Oh, maybe not, right? And then when you start going even deeper into large ticket interchange and things like that, you start to see that maybe, the full interchange wasn't actually even realized. So, you just have to really peel back the layers. And I think that's probably the biggest thing that I encourage anybody that I talk to is, make sure you're asking all the right questions. And if you've never been down this path before, we can help you with that too. We'll give you a list of questions to ask the banks and to ask any other providers out there that you're talking to. We're not going to try to sell you on anything, but we just want you to make sure that you're asking the right questions and really peeling back the layers to see how are they getting to this number. And is it actually feasible that they're going to get to that number, or are they just trying to throw something up against the wall to get you to sign a deal? So that's probably the biggest thing. And then
Right.
You already kind of alluded to just the technology piece, right? I mean, we're a true fintech company. We're 100% bank agnostic, so we're not interested in trying to upset your treasury relationship. But when it comes to strictly payments and building the biggest program with the biggest ROI, we do confidently feel like, hey, we've got one of the best stories to tell and one of the best solutions in the market. And so, like you said, that there really hasn't been any Esker customers to date that once they speak to us, they're not interested in continuing down that path to hear a little bit more. So,
the accent probably gives it away, but as an Englishman in Europe, credit card isn't used as much. And I've been here in 16 years now and come to enjoy using credit card for points in the US.
Mm-hmm.
Once upon a time, I lived on the REI credit card. But anyway, what my point has been, I've become more used to that's a way of doing business in the US, especially, perhaps more so than other parts of the world.
Sure.
And one of the perhaps preconceptions or some head trash, some mistaken information I was carrying around was that the large companies wouldn't care to take virtual payments. Only the small companies, really hungry for liquidity, really needing to get paid quickly, would take that. But I'm under the impression, and I got this from I was on a call recently with a healthcare company, another healthcare company, as it happens, that has said, look, we deployed a different payable solution. It didn't work out. We're removing that. We're going to deploy Esker. We're actually, in their case, they're going to combine the two and use our integrated platform. That's their intent. So they can actually make payments from inside Esker. So it'll be a true integrated story for those. It doesn't have to be that way. Other joint clients have just said, great, we'll use Esker as the front end AP suite, ERP in the middle, and then we'll take advantage of Corpay at the end to pay through all the different mechanisms they offer.
Sure.
So what I'm wondering is, what happens when folks say, yeah, is it true the big companies won't take virtual payment, or is there more to the story there?
Yeah, there's definitely more to this story, right? I mean, there isn't, a set of rules in particular where, yeah, big companies take it more than smaller companies. Really, it's a case by case scenario, and I think some industries maybe accept card a little bit more than others. But the reality is, we're going to be the ones that are going to reach out to your vendors on your behalf and find out if we can get them to accept a virtual card. And the reality is, anyone that's already accepting credit card from another company, legally has to accept a card from whoever the customer is, right? And so that makes it a little bit easier to kind of tell the story. The other thing too is we're willing and able to kind of share some of the benefits with the vendors to get their buy-in on why it makes more sense for them to accept a virtual card versus a check. Obviously, payment terms can be a big reason for that, so they get paid faster. But again, the other big thing too is most companies, when they see the value of accepting a virtual credit card for payment, they'll figure out whatever it costs to do that, right? They've already kind of worked that into their cost of doing business. And so I think that's probably the big question that comes up more times than not is, hey, if I start paying my vendor by virtual card, I've paid them by check for the last 10 years. If I start paying by credit card, are they going to increase my prices? They shouldn't, right? If they're already accepting a virtual card, in fact, you're probably already paying a slightly inflated price to do business with that vendor because they're offsetting the cost of accepting a virtual card from everybody else. So you might as well take advantage of that too and actually start paying them by credit card yourself. But we'll tell companies like it's probably a good idea to just look at your invoices and see if they're trying to tack on any kind of 2% fee for the credit card or whatever it is. And if they do, then we can always move them to ACH, or worst case scenario, we can move them back to check. So it's never something that you have to force upon vendors to do, but a lot of them, they're seeing the value. They want to get paid more securely. They want to get paid faster, and they've already worked in accepting virtual card as part of their cost of doing business. And so it's kind of a no-brainer for a lot of companies to move them over to a credit card.
Right. In the example, in the conversation I was invited to, I think the CFO there had said, we actually know there's a couple of players in the market. They say they don't take a virtual payment, but between the lines, we believe they do take virtual payment. We have friends in the industry and friends at other organizations in this healthcare space, and we're hearing that they do actually take virtual card payment. Okay, but the rate may need to be lowered a little bit to sort of incentivize their treasurer to do so. That was kind of, so you're seeing that too, or you would see it more than I do,
Yeah, and you're right. There's sometimes companies will put a restriction, right? Maybe it's a dollar limit. So they might say, we'll accept a credit card payment up to a $10,000 payment, or maybe it's a $50,000 payment. So sometimes there are some restrictions in that sense. And then the other side of it too is the interchange fee that the vendor's paying. And so, a average interchange fee for MasterCard or Visa payment is around 2.5%. And for some companies, that might be a little too much. They would like to accept virtual card, but they're kind of saying, you know what, 2.5% is a little steep for us to accept virtual card. So one of the nice things that Corpay has to offer is we can actually offer them a virtual card payment off of the MasterCard rails, which allows us to get the interchange closer to, maybe half that, 1.2, 1.3%. That allows more vendors to be able to accept a virtual card payment without having to pay full interchange. So that can be something else too that we can offer, and a lot of times that helps with acceptance as well.
So for anybody, potential enterprises looking at Esker and Corpay, or the existing customer base, who my intent is to share this with all of our customers, make them aware of this opportunity. It sounds like, from what I'm seeing, is big savings, big spend opportunity. What should they do? I mean, how do they sort of really share information with you to work out, okay, what is the potential savings, and okay, apply some conservatism so if they do take it up the line to the financial leadership, those numbers are realistic. Nobody's going to get burnt here. What do you do? What's your recommendation to these folks? How do they see just how much value is here versus what they're getting from the bank?
And so what we do with anybody, and this is all preliminary, and this is free to anybody that wants to strike up a conversation with us. we'll ask them to provide us their vendor file, and we'll actually send them a template. So we have all the fields and the required fields and criteria that we need to run what we call a payment analysis report or a PAR analysis. And what that allows us to do initially is, number one, to match their vendors against our vendor database, our proprietary vendor database, which, as I mentioned earlier, has over 1.1 million vendors in it. So we'll be able to come back and give them an idea, a very good idea, of how many of their current vendors today that they're paying by check or some other form of payment other than virtual card. We'll be able to let them know, hey, we believe that 16% of your vendors, your current vendors, actually do accept virtual card, right? So it gives them a good understanding right out of the gate. The second part is, based on some of those required fields, we can also look at, just based on how many payments they're sending out on a weekly or a monthly basis, if we can convert 78% of those payments to an automated payment, how many more hours are we going to give you back in your week? Plus the cost savings of not having to cut checks in-house. For us to cut a check, it might be about $1.50 per check. And again, that's all scalable based on volume. So, for companies that have actually done a check analysis from a cost perspective, a lot of them will find that they're spending almost $5 to $10 per check, fully loaded cost, to cut that check in house. So that right there, by reducing the amount of checks that they're going to cut, and also having us do it for closer to $1.50, there's a big cost savings there. So we'll put all of this together and then sit down with the folks, whether it's the financial individuals or even the accounting people, and say, look, here's what we are projecting as an ROI for you, right? And we give very conservative numbers. We go through and we scrub out a lot of vendors that we know will not accept, or that, for one reason or another, they're not going to be participating in a program like this. And so we give very, very conservative numbers up front, because we're not trying to win the business by, throwing some huge number out there. We really want companies to see the total value in the technology and the support and the overall single file payment solution. And then, the rebate, the monthly rebate, is kind of a nice add-on on top of that. And it can be, to your point earlier when we were talking, it can be a very aggressive rebate that can, pay for a lot of stuff, including, an Esker solution as well as a Corpay solution. Very easy. So it is still a really, really good rebate, but we want companies to see that this is not just about a virtual card. This is not just a credit card program, but this is truly a full AP solution that will make your life easier, more efficient. You're going to realize a lot more cost savings, and then have a nice, revenue stream coming in as well.
Yeah, again, that's I'd heard that story in the past, of that dream of making accounts payable a revenue producing department. I've actually had folks turn around and say, no, combining the two actually turned finance, paid for the entire finance department.
Yep.
And paid for both solutions. And I think when you start to see that, well, it's a pretty interesting conversation.
Absolutely.
For the treasurers, CFOs, the digital leaders who we get the pleasure of chatting with. So, is there anything I didn't ask you? I mean, what should I be asking you that I didn't ask you? Any other context?
No, I mean, I think it's very good. I think, for your customers out there, that would probably be the biggest thing that I would kind of, challenge them with is to really look at, the back end process, right? And say, okay, well, why are we not doing something with automation? Or if we are we getting the most out of it, right? Maybe it's time that we actually look at our existing, virtual card program and get with someone like myself or, someone at Corpay, and go through some of those 20 or 25 questions and see how many of the boxes we're actually checking. Because, a lot of times you don't know what you don't know, right? And if you have something in place today, you're thinking, oh, we already have a virtual card program. It's working great. We got our one-time annual rebate last year, and it was pretty nice. That's great, but what else could we maybe do to help you? And if you don't know that a solution like this exists, you're probably thinking that, you're doing everything extremely well. But the reality is you could be missing in a lot of areas and missing out a lot of, ROI that we could help with. So, my encouragement would be, hey, if you're even, you have even a hint of curiosity, talk to us, right? We'd love to talk to you. We'd love to understand what you're doing today, what you're not doing. We kind of say, we want to understand where you are today and where you're trying to get to, right? And if we can help you get there, it'll probably make total sense. And, we'll start this journey, as soon as you're ready. And if we can't help you get there, then we'll be very transparent, very honest. And, let you know that too. Maybe you do have the best solution in place, but I think it's worth a conversation. So we're here. We'd love to help. This is what we do, and we feel like we're extremely good at it. But more importantly, we like being a partner to companies, right? We don't just see this as something that we sell, but truly coming on board as a partner to make companies more efficient, and then as we talked about, ultimately impact their bottom line in a very positive way.
Well, speaking of bottom line, you just reminded me of one of my favorite stories with Corpay. Is there was a company referred to Esker by the Corpay rep. I think the CFO and the controller were introduced to Esker, and as the Corpay rep was aware that they had some plans to be more efficient, they had some goals to be leaner in payables and absorb growth. And so the conversation goes on for a month or two, and I think one of our reps said, well, this sounds important, but what else are you working on? Many companies have other balls in the air, other projects, other initiatives. Who doesn't? And it was interesting because the CFO turned and said, well, the other side of the coin I need to think about is both invoicing faster, collecting more effectively, and applying that cash. And perhaps this is where many CIOs and CFOs have said, if I can have one solution that does multiple things across all of the cash, procure to pay, and it talks to each other, well, that data is shared, that just makes our life easier. And in that scenario, what actually happened is the CFO said, well, we need to improve our daily sales outstanding too. So if you're telling me I can improve daily sales outstanding, get rebate by combining the two solutions, and then make life easier for our IT team because it's one solution that will work with multiple ERPs, then that's obviously of value both to the Esker customers and Corpay customers, or anybody who's taking a look. So my objective of just recording this with you today was really to give a shout out, because there'll be press releases hitting the news any day now about Esker and Corpay's partnership, strategic alliance.
Yep.
When folks look at the two wheels that describe how folks use Esker, payment management is one of the segments there under procure to pay. And I think it's good for folks to understand, well, how's that being enabled? And Corpay is a leader globally. I can say globally.
Yep.
And allows us to take advantage and offer all those benefits you have under the MasterCard program. So there may well be folks who take a look at this and say, well, I'll take a look. Hopefully so. So thanks so much. Thanks very much for everybody taking a look at this. And Brett, how can folks reach you?
Yeah, probably the easiest way is email, and that's just BORR@comdata.com. We haven't moved to our new email address yet, so the old one will still work. And if you want to reach out by phone, my number is 720-257-3487. And like I said, I'd love to talk to you, just have a discussion, and see where we might be able to help.
Great. And I'm Dan Reeve at Esker. Any questions, please get in touch, daniel.reeve@esker.com. Okay, thank you very much.
Absolutely. Thanks, Dan. Appreciate you having me.
Big thanks to Dan and Brett for your discussion today. If you have any questions or are interested in learning more about automating payments to your suppliers or just Corpay in general, you can find contact information in the show notes. And as always, if you're interested in learning more about Esker, you can find us at esker.com. Thanks for tuning in today, and we'll talk to you next time.